Getting to our main topic for episode 97, we're going to be talking about how blockchain is being used, specifically security tokens, by the big banks of the world. In fact, we have an article up on the blog, the Security Token Market blog. You can check it out, where we cover out of the top 100 banks, almost 50 of them are working on blockchain and security token projects, experiments like the one we saw with Societe Generale in our top 5 today. And that's happening all around the world in a couple of different specific use cases. So today, Kyle and I, we're going to drill down what are the big ones that they're looking at. How can we expect the world's largest financial institutions and banks to start to get involved in the security token space?
And so when we're talking about this banks, the first thing that you think about is the currency, right? Is the CBDC. We've talked about this term before, central bank digital currency. So you have a fiat currency, it's managed very manually. You've got outstanding dollars or euros or whichever assets, and there's a Forex exchange. So you've got these banks that are taking securities and settling products around the world with international investors and international banking partners, and they're exposed to significant amounts of Forex price changes, as well as the manual process of owning and holding specific dollars or fiat assets. And so creating a CBDC is tremendously valuable and beneficial for a bank, where they can automatically and programmatically manage their outstanding asset, or their outstanding fiat in this case, as well as really being able to iron down specifically where their assets are going and how they're being managed.
Yeah, central bank digital currencies are a big wave. We saw a lot of research, if you want to go check it out, by the Bank of International Settlements, the BIS. They do a lot of research on this. They've been working with a lot of all the major central banks around the world. We also have an article on that specifically. Short on the number, but I think it might be almost 60 different central banks around the world are in some way or application, whether it's they call a wholesale CBDC, where they're actually just working from bank to bank networks, or where they're actually having retail CBDCs, where actually us consumers end-to-end have access to this direct central bank money. In this case, in the United States, we've even seen the Fed talk about exploring a digital dollar, and that could be used in a retail application. We may one day have our dollars digitally. In fact, it's happening right now in China, where there's global or nationwide outreach and distribution of their central bank digital currency, or the yuan, that you can actually use now to buy goods with your phone, with your yuan, and actually go to ATMs and convert real cash in between and out of the digital version. Of course, many benefits to this, right? The central banks can track all the capital easier, they can move it more cost efficiently. Drill down on that. Again, the Bank of International Settlements, lots of great information there if you were more interested in that.
And it's been interesting as CBDCs have entered into the mainstream vernacular a little bit more consistently here in 2021, especially with China launching their yuan that's been widely adopted over there, and in some other investments they've made internationally. We have seen a lot of pushback around this idea of the privacy component of, okay, if we launch a digital dollar or a digital fiat, how much control is a central bank going to have over our finances and seeing what we have and what we own? And it's been fascinating to see the different solutions that have come out. China presumably is managing their own private ledger. They haven't come out and really detailed how that process is going to work. The US, the Fed, has come out stating specifically that they identify that privacy is a key concern here, and they want to find ways to make that solution, to adapt and to provide a private solution, or at least something that's semi-private for their consumers. And then you've got companies like the Bank of France, central banks like the Bank of France, that have already piloted central bank digital currency trials, and they are actually using zero knowledge proofs, which is a very technical concept involving Merkle trees and sharding processes, to allow for them to settle these transactions and benefit from the blockchain-based solution without actually getting the full picture of where this stuff is going. So it actually does provide some level of protection for those that are leveraging these transactions in a way that can still be very optimized and leverage blockchain solutions. So there's a really wide range of how these central bank digital currencies may be structured from a technical perspective, and it will be fascinating to see how that's a new concept. When you think about Forex, when you think about currencies, usually you would just compare a country's GDP to determine which currency you want to use. Now you also may need to consider the structure of the actual underlying asset.
I think you absolutely will be. In fact, you noted on something there about central bank digital currency and also stable coins in general. They're a critical part of the future financial ecosystem. If it's all going to move digital, if all stocks and equities and products like that are going to move digital, we need to, as you said, be able to settle those using a digital currency, not just physical cash, which is one of the issues that plagues a lot of these banks in the first place. So let's get into that second big feature that I think big banks are looking at, and that is, of course, clearing and settling securities trades instantly. You mentioned that they were able to do it, without necessarily even knowing all of the specific information from the third parties. It was maybe validated on chain by third party oracles, as they say, to verify data is real, but the bank necessarily didn't need to know all the information, which is how a lot of the financial infrastructure is built on today, not trusting each other with specific information. So it's exciting to see that we've got many, many banks all around the world trialing out this technology on different blockchains and different use cases, and actually all finding tremendous success in terms of creating value in efficiencies and savings and new opportunities to bring features to their customers.
Absolutely right. I mean, instant settlement is one of the biggest advantages of blockchain and smart contract solutions, I think, in total, because of the fact that you're talking about a significant cost in terms of settling these transactions. Because as a bank or as a broker, you need to work with a clearinghouse or a specific firm that's dedicated in validating all of those transactions and settling the books at the end of the day. They obviously take significant fees on that, but that's not even the biggest cost. You have two additional costs that I think sometimes get lost on people. One that's a little more obvious is the T+2 settlement system here in the traditional markets, where you've got multiple days where these shares are just sitting there and they're not fully settled, and it does provide some complications. It can screw over companies like Robinhood that get these tremendously inflated capital requirements because of late settlement periods and things like that. The T+2 system is very inefficient in a high-frequency trading environment that we live in today. In a tech world, these trades need to be settled faster because this long delay period causes serious issues. But not only does it cause serious infrastructural issues, it's a lot of value that's left on the table, because what we're seeing, what we've seen over the past year, is that these clearinghouses are strategically leveraging that T+2 settlement period to actually trade on those shares as they sit in a float. And so they're actually making trades on this float, which is removing value from the bank or from the investor, and is being kind of just sucked away by a clearinghouse. So you're just leaving a lot on the table. Mike Cagney pointed it at 3 to 6% in just settlement and clearing savings just by leveraging blockchain solutions. And we have numbers as high as 70 from Paxos. So there's a serious percentage savings here at different pieces of the pie. And it just makes all the sense in the world for firms to use.
It's super valuable for everybody involved. Obviously, this is definitely big on the operational side of things for a bank, but it is also good for the investor. In fact, now that we're seeing investment banks and big asset managers look into this and say, you know what, we're going to tokenize and digitize all of our financial products and all of the assets that we're managing so that we can enable faster information, new access to financial products, digital access to financial products, and potentially new liquidity capabilities by digitizing all of these securities that they manage. And that's, I think, the next and final feature that we can talk about here is the idea that, you know what, if banks are leveraging a completely digital settlement and money management system, then what does this mean for stocks and financial products in general? I think it means much larger and faster distribution. It means a whole new model for settling overnight and for trading securities between different platforms. And it obviously means that we now have a more tight and potentially closer alignment between the different banks and parties that are here to support trading between, of course, buyers and sellers. And that's what's important at the end of the day.
Absolutely right. I mean, banks are the main proponents of selling and facilitating the trade of corporate debt. And so they underwrite significant amounts of debt, both in the real estate sector as well as from a corporate perspective, and even bank to bank. And debt is traditionally so illiquid. They still manage debt on private markets where guys are calling each other and, hey, I've got $50 million of debt in this specific company, here's the rate, blah, 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 let's sell it to some other bank. They still manage it that way. It's not a digital market at all. It's fascinating, and this is a huge opportunity to provide more liquidity for that kind of asset. I read that a figure that there's between 50 and 100 trillion dollars in debt trading volume per year that's happening OTC. It's still happening in a non-digital process. You can save a couple percent on that. You're talking about trillions of dollars that are entering into the system here that are newly captured liquidity options for those investors. Not to mention that those bonds are probably going to be priced more efficiently because it's a more efficient capital market.
Yeah, that's why we've seen examples like HSBC come out and say we're focusing on tokenizing bonds in specifically in Asia, as well as many other banks around the world doing the same exact thing. So we've got digital cash enabling us instant clearing and settlement, enabling a whole new digital way of managing assets and participating in investments. And that's why security tokens are very, very interesting to big banks, because it'll certainly, if they don't get wise, they're going to get their lunch eaten by the startups that are coming after them. As we've just seen HG Exchange get launched in Singapore, we're seeing more and more platforms launch every day, so we're gonna see how much closer they want to get to this.
Firms are raising money, products are being launched, assets are getting tokenized. Now is the time that banks are starting to realize that they can't sit on the sidelines for too much longer, because it's just the efficiencies and the opportunity here is just so clear at this point.
There's absolutely no stopping it, and I think that's a good place to stop and conclude another episode of the Security Token Show. We hope you enjoyed, we hope you learned something. Please reach out to Kyle or myself on LinkedIn or Twitter if you have questions. Of course, be sure to submit any news and events and anything you want us to cover on the show at stomarket.com/news, as well as go there to STO Market in general to get your latest trading pricing information. Check out our blog for some great resources. And of course, every week on Thursday, we have our Speakeasy on the Clubhouse, the Security Token Speakeasy, where we bring on guest panelists from the industry to talk about the latest show. And if you don't have time for any of that, just simply subscribe to our newsletter, the What's Drippin' newsletter, where you get a digest every Monday about everything that's happening in the space.
Thanks so much for listening. Send us your feedback, leave a like, leave a comment, and we'll talk to you next week.
Happy tokenizing.